Welcome to the London Outlook for Monday, the 26th of February 2024. Starting off with the economic calendar, as you can see, there is no red folder news events for today, and thus the economic calendar has no bearing on our trades. From a technical analysis perspective, starting off with the daily, what we can see is that we have 4 consecutive bullish close candles. If I just hide the inside bars, what you can see is that there are 4 consecutive bullish candles, and thus we're anticipating that today will be a bearish day. Having said all of that, let's then move on to the 4 hour, where we can see that market structure is clearly confirmed bearish, with lower lows and lower highs being printed. And then what had happened last week is that we actually body broke this point right here, and why that point is significant is because it was the pullback phase achievement of reaching the pro-trend extreme, and then the last point of supply failing, which then validated to us that the pullback phase has ended and that the pro-trend phase will likely follow through and take out this external range liquidity. However, that didn't happen. What then happened was that this became an unconfirmed lower high, with 4H demand then taking control and validating to us that this is likely targeted, and that's precisely what had happened on Thursday. And because of Thursday, we printed a new potential lower high, and because of that we achieved this objective, leaving us no longer in an unconfirmed scenario. However, what Friday then did is body broke this point, which then validated to us that the pro-trend that the pullback phase primary leg, which is this leg right here, is extended, and thus a counter trend, a trade trend may be valid from this last point of supply pullback phase OB situated right here. The reason why I use this particular OB, even though it's mitigated right here, is because this wick right here was not body broken when we broke this point right here. So for that reason, I feel that it's more valid to consider this as the last point of supply, because this using this as an OB didn't actually break any structure point, and thus is potentially weak, which makes this a better bet for counter trend trades. Having said all of that, what is the bias for today? The bias for today is purely to short, at least until we reach this last point of supply pullback phase OB right here. Like we know from the daily perspective, we have those bullish 4 bullish candles, and thus we're expecting a bearish day. So for the purposes of trading today, there's only reasons to short, and thus for those reasons we will consider only trading short positions, because the previous high of the day created this leg, although it's not in the direction of shorting. As you can see, we had a bullish day. We do have the daily bias to support why price should actually come higher and respect something right here. So the first potential position that we can take is anchoring our fib to the extreme in the previous high of the day, which is this latest leg. This leg like here, right here, is significant because it's the deepest reaction to the pro-trend extreme OP right there, whilst also being the leg that will ultimately become the 4H pro-trend primary leg. Once this OB is broken, we'll have that new 4H pro-trend primary leg. However, until then, this will be the main leg that we base our ideas off, and given that today here's a daily bias short, there's reasons to believe that price may come higher, and we'll try and find a valid BOI somewhere in this region right here, rather this region right there, while also ensuring that our stop loss is no more than 1/3 of the daily range. The current daily range for GBPUSD in February is about 78 pips, so we'll bear that in mind. And then in terms of actually validating a current day based idea, we'll need to validate that the pre-Asia high of the day will hold, whilst also ensuring that the Asia liquidity is taken to the upside first, and then we can potentially consider some short positions. Like I said, there's no red folder news events, so we actually need to validate that this Asia liquidity is taken and then either validate a Frankfurt high of the day is holding or a London high of the day is holding. If you recall, the Frankfurt high of the day is validated as holding when London takes out the Frankfurt low, or alternatively a London high of the day is holding when New York takes out the London low. Obviously in this situation we have the potential to enter into a limit order in and around this area, so we'll take one short position and not multiple. So let's investigate where we can potentially place our limit orders. Just want to clear up some drawings. Okay, so we have this potential chain right here. Whilst there is this unmitigated area sitting above, maybe if we anchor to that candle, obviously to support this we'll need a supply demand flip, which it appears that we do have right here, and we can just mark that out: initial reaction, supply demand flip. So we do have this. Whilst this area is mitigated quite efficiently, we do have that unmitigated area that we can potentially rely on, and that's actually a really good area because it aligns with the 38% POI. And then obviously we've got another chain situated right here, and this is more so associated with the extreme, which you can see was mitigated right here, and we got that POI right there. So we have two options: we can use this or this. Let's see, if we use this POI right here, our stop loss would be about, let's say, 17.6 plus spread about 19 pips, and let's just say 70% of that is, sorry, the daily range is 78 pips, and a third of that would be 25 pips, so we are well within range. And then obviously our target will be this daily range. However, what we do know as well is Monday has the potential to be the high of the week, so there's some sense in actually holding straight all the way to the swing ERL target right there. So that's one potential. I think the alternative would be to use this POI right here. However, there's always the chance that we just may not get triggered, although the stop loss is significantly better, of around 14 or 15 pips. So there's that opportunity right there. And then the other thing that we have in our favor that will allow a bit more aggression is the fact that we have this Asia range that wasn't swept, and that's now sitting at day 1. So Friday would have been day 0 and today is day 1. So for those reasons I'd rather get in here knowing that this high is likely protected, and we'll actually likely take this out. Obviously these pretty much require that we come up like that, react, and then come down, but we'll see how it plays out. So that's an order that I will be putting on. And then for subsequent orders, if this doesn't get triggered, obviously I'm not going to be interested in taking any short positions until this Asia liquidity is taken out. What I've realized lately is that the odds of both sides of Asia liquidity being taken out is around 60%, and what you'll see is that most days Asia range liquidity is often taken out. So maybe not Friday, but you can see Thursday both sides, Wednesday both sides, Tuesday has one side, Monday is both sides again. So there is this alternative target right here, and this one is day 0, 1, 2, 3. So this is sitting on day 4 of an unswept Asia liquidity low. And what this essentially means is we've got lots of liquidity targets to our ultimate target, making it all the more favorable to actually hold us trade if it does get us tagged in, because there is Asia liquidity to the downside. Well, this one is quite earlier now on day 4. We do have day 1, so it makes sense that even if we pass the London lull point, if New York actually takes us into this, I won't be removing this order here at the London lull, because we have a lot of confluence for why, if we do get tagged in this discount area, it will follow through. So that's pretty much my London outlook. I hope you have a good trading session, and we'll chat again for the New York outlook.